I'm Virginia McGathey here on the floor at the CME Group, reporting to you on the grain market. Today, soybeans, they gapped up. It seems that the weather worries in Argentina has heated up again, that some areas of Argentina did not get the rainfall that other areas did, and so there is some worries about some crop damage. Now we've hit these new highs, and $10 has now become the support as opposed to the resistance. If we can stay in this area and get some follow-through buying, we could definitely be off to the races. We are, however, in a full-blown weather market, and we expect to be here now for the next couple of months. But we're going to watch also with South America if there is going to be any problem with their shipping or their actual yield numbers. Once they start to come in, it's definitely going to affect our U.S. markets, and I can see that our volatility is really going to heat up from that point. Corn was also on the rise. That weaker U.S. dollar index is really underpinning all the commodities, the futures across the board, and so that gave the market a lift. We're in an area that we haven't seen corn since early December. That South American weather is still also a factor in the corn side, and after Friday's profit taking, really kind of rebounded. It seems like that the buyers returned, and now with a vengeance, and really starting to bid up that corn to much of the delight of the farmers right now. And now we're going to get into a point where we have a two-sided market. There's going to be some real volatility here. The U.S. dollar index also coming down definitely lets us become a little bit more competitive, and that's why part of wheat is rallying. Now, interesting thing about wheat is that drought concerns in those plains are really like driving that market higher, but there has been a real scramble of this short covering. After the first run up and the market started to come back down, a lot of funds really started to add to their short position. Now, we knew that if we got to a point that they would start to cover again and really push the market higher, and it seems that we have gotten to that point. So the in the hard red wheat, had traders worried that there was going to be some real crop damage, although we haven't gotten to the point of no return yet. So maybe something can happen that the hard red wheat would still be okay, and we're not going to really know if there's going to be any damage still for quite a while. But that being said, we've got the scramble is on to cover those short positions, and that's why we've seen the market really strong today. That's all from the floor at the CME Group here in Chicago. I'm Virginia McGathey.